Hey, how are you? It's John here, doing a quick video here on investing. We have basically over the last week we have just some huge bellwethers that have reported. In case you don't know, the ones that we had, and this was basically like midweek last week. We had Apple report, we had Facebook report, we had Tesla report, and then today, at the time of this recording, it's Tuesday, February 2nd, right? And then after the market closed today, we had Amazon just completely blew away their numbers. I think a lot of people knew that was coming with respect to the pandemic, and here we are. We're about 1 month away from when the shutdown happened, which was March of 2020. But Amazon had some really big numbers. But basically, I'm here to talk about. I broke down the financials as much as I really could, right? Because I look at full year revenue, full year, or at least most recently reported full year, right? Because a lot of companies, they'll have a fiscal year that ends in, hypothetically, let's say June, or like Apple, it looks to me like their full fiscal year ends in September. So all I can really do is go off of what I have, right? So the most recently reported trailing 12 months. Is really what I go off of, okay? And then also there was today that of course Amazon reported, and then I also look at Netflix, which was actually 2 weeks ago, right? So I'm looking at all those. These are the big bellwethers. I have a lot of exposure to all these. I'm personally actually going to be reducing my exposure to Amazon because it's kind of grown a little bit out of control, and I want to really pave the way for some more of the growth companies that I like Roku and some others. But today I'm gonna show you. I'm really gonna stack them up against each other, right? So I've pretty much done the most that I can, at least as far as today goes. And again, today it's Tuesday, February 2nd, in terms of showing you the revenue comparisons, right? And then the gross profit, and then a ratio that I really like, which is dividing that full year, most recently reported full 12 months into their market cap. And what I find really interesting is of all the big ones that I've thought that have reported between today and last week, the most attractive one in terms of using that ratio is actually Facebook. And it's pretty wild to see how strong Facebook's gross profit margin continues to be, and how big it really is when you especially compare it to something like Tesla. I think that market cap wise, Tesla is actually bigger than Facebook now, but it's pretty shocking to see their differences in what their gross profits are and what their revenues are. So let's go ahead and hop in. Really super simple spreadsheet I have for you, and I'm going to show you just real quick, just so you can take your just take the information and do what it is that you want to do with it. Make your decisions. It's really pretty key for me when I start to increase my exposure to certain investments, right? But basically, so take a look here. Got all the most recently reported 12 months of these Amazon, Apple, Alphabet, Google, which actually blew numbers away, and they're up really big in the after hours. I think they're up again today at the time of this recording. It's Tuesday, February 2nd, 2021. But I think that if you take a look, Google was up, I think, 8% after hours. Yeah, 7.4% it was up in the after hours trading. Really high for, their $2,000 stock at this point. Just the actual price, right? Which obviously doesn't really mean that much, because you can get those, you can buy, the Google shares in terms of fractional shares. You can buy them as fractional shares now at a lot of brokerages. But basically, we've got Amazon, Apple, Alphabet, Microsoft. Microsoft is one also that reported last week. Facebook, of course, Netflix, and Tesla. And that's all that I'm going to talk about today, okay? So as you can see, the most got market caps right there. Here we are, Apple, almost 2.3 trillion, kind of crazy. But we got all their most recently reported 12 months. We have Amazon coming in just unbelievable at a full year, basically 2020 full year of 386 billion that they put down. That's basically at this point the biggest revenue of the group, right? And then the most recent gross profit for each of them. Pretty wild to see that both Apple and Microsoft reporting higher than 100 billion in gross profits. But we come down here, and this is actually the the little multiple number that I like to look at, right? So it's really the most recently reported full 12 months gross profits into the market cap, where you got Facebook at that number of 10, and then Alphabet, Google at that number of 13, which is really attractive. I did all these numbers pretty much in the end of October, beginning of November, which is the last time that these bellwethers reported. And I was really surprised at the time that Facebook and Google were, basically reporting. Well, their little ratio figure here was the most attractive of the group, right? So you take a look at, for example, Tesla. Hey, look, I love Tesla. I mean, I don't really know if I can say I'm a bull. I mean, I bought some Tesla. Here, I'll go ahead and open up my screen again. I bought some Tesla. Really, I even bought more throughout 2020, but I bought some Tesla in January of 2020, and it's up almost 1,000%, which is just so crazy. I mean, that's so unheard of for my lifetime. I mean, I'm a Gen Xer, right? And I've been investing in the market since 1989 when I was a kid. But basically, I just don't really know if there's going to be other stocks that are going to, move 1,000% just owning the stock, in a year from January 2020 to January 2021. So Tesla, I don't know. I mean, I definitely like it. I also have exposure to it through owning ARC, the ARC Next Generation Internet, as well as the ARC Innovation. But it's just really shocking to see that there was a 1,000% return, from Tesla in basically one calendar year, right? So anyway, so we'll go back up. We'll go back up to the spreadsheet here. So basically, yes. Then we got Netflix as well. So if you actually look at the hard numbers, I mean, one thing that's always been really nice for me with respect to Netflix is they always have a real rock solid gross margin, right? That 38.89. They've always been right there in that kind of 35 to 40% gross margin range, which really, is very telling of their consistent business. And then you take a look at their, their revenue, their gross profits, and they've got about, let's go up to Netflix again. You look at their gross profits of 9,720,000,000 versus Tesla. Tesla's numbers were a little funky. I mean, it was kind of difficult for them. They didn't really come out and give the full year. I do have the trailing 12 months from Tesla, but I'm not really sure. If it looks to me like potentially their fiscal year might end in June of each year, right? But in any case, the trailing 12 months, most recently reported trailing 12 months gross profit for Tesla is about 595. So let's just say it's 6, right? So it's pretty shocking that here we are. Netflix is almost twice the gross profit number of Tesla, and then you take a look at their gross profit to market cap for Netflix, and it's about 22. So, and then Tesla's like 138. So it's like just really kind of crazy to think about, how high, just how expensive Tesla is. And, who knows? I mean, I guess it might keep going up. I mean, I don't know. At this point, it's pretty close to being $1 trillion, company. And, with revenues of not even 30 billion and gross profits of not even 6 billion. I don't, at some point the numbers are going to matter. Don't get me wrong. I am an investor in Tesla. I will most likely increase some of my exposure to Tesla, very, very small exposure, but I don't really see how it's going to be a breakout investment for me anymore at this point, because it already has been, right? So I'm going to be, I'm actually at this point, I'm really interested in paving the way for Roku, for Snapchat, for Etsy, for these smaller companies that are in that, $5 to kind of $20 billion, market cap range. And then also some of the EVs, like maybe there's some smaller EV players, the electric vehicle players, besides Tesla, that are going to come up. One I have my eye on, I'm not buying, but I do have my eye on Fisker. Very, very huge fan of Fisker and his designs, in terms of Fisker designed the BMW Z8 back in the 90s, from the mid 90s, and then the Z8 was in production from 2000 to 2003. I've done a little bit of research on the success of it, but regardless of the success of the Z8, I really love the design. For me, it's all about the design. I really love that design. So I am watching Fisker. They recently went public. It looks to me like they don't really have any financials, but it is a very interesting and potentially compelling electric vehicle play. So let's go back up here. So anyway, I don't have all my decisions as far as exactly what I'm going to do with respect to changing my percent exposures. I can tell you that I am going to be selling some Amazon. Certainly, I don't know exactly how much, but I'm going to bring it down to at the most a 20% exposure, hopefully a little bit less, because it's gotten a little out of control with respect to my portfolio, because I haven't really sold much of it. But basically, there you go. So these are the figures, for Amazon, Apple, Alphabet, Microsoft, Facebook, Netflix, and Tesla. And then, this is really kind of this little number is where I like to live when I make. It's one of the places I live, right? When I make some decisions as far as kind of increasing my exposure and stuff. But I'm certainly going to be really getting more into some Facebook and Google, that's for sure, and really shedding some of that exposure with Amazon and maybe even Apple. Apple. They're just so big at almost $2.5 trillion. It's just hard to imagine if that's going to even be another breakout investment. So anyway, I'll do once I actually make all these trades and I change my percentage exposures, I will do some videos on that and then show that to you all as well. In the meantime, if you have any questions, let me know. Put them in the comments area, and then also in the comments area, let me know if you subscribe, if you want to hear more of this stuff, and then I'll answer any questions. But okay, guys, thank you so much for checking this out and watching this. If you did, I'll put a link inside of the description area. I came out with a blueprint. It is a blueprint where I cover investing, online income, credit, business credit, financial independence, and I got a guide at the end. I've got all the groups in the US that offer you a free credit score, plus all the groups that offer you a free FICO score and the corresponding bureau, which means you'll never have to go get some membership to get a free FICO again, right? It's almost like I think 12 to 15 pages of a guide of all these free FICO scores. It's only $7, everybody. So you can go ahead and get that from the link below. And then also I got another program too, which is called Profile Profit Machine. You can generate revenues, generate profits, or just generate leads or generate income from your social media profiles. You come in, you can basically clone my digital products business. You'll be partnering with me and the world record holder for the fastest website funnel to hit $1 million, and that record is 28 days, and you'd be up and running. You could clone our funnel, and then with really only 90 minutes of training, and then you could have your own funnel and your own digital products business as well. So if you have any questions, let me know. Thanks, and have a great one.